Okay guys, so we will now move on to our chapter 1, just a basic introduction. So in today's class we will be concentrating on very simple things. First we're going to understand the meaning of the word cost, because the name of this subject is cost and management accounting, correct? So what is cost? It's an expense which you are incurring, correct? For what? To produce something or to render a service, correct? So it's an expense. Now what do you mean by it being an expense? Okay, let's take an example. Do you all like cakes? Correct? So let's say we are baking a cake. Okay? What all will you use in a cake? Now say your mother says go to the market and bring me certain things. What things will you buy? Flour, eggs. Okay, we're not making eggless cakes, is it? Okay. Eggs, then butter, cream, sugar, chocolate. Feeling hungry? Yeah, me too. Okay. Chocolate, caramel, sprinkles, whatever. Okay. Now, are you gonna get this for free? No, right? You have to spend money, right? So, each of this will cost us something. Correct? So, let's say the flour costs us, say, 100 rupees. Eggs cost us 50 rupees, butter costs us 50 rupees, cream also costs us 50 rupees, easier. Sugar costs us 100 rupees, chocolate, sprinkles, whatever costs us another 100 rupees. Correct? Now I've already got all these things. Your mom asked you to go to the market, you've collected all these things from the grocery store, and now you are headed back home. Now will these things make the cake on their own? No, right? Who will make the cake? You will make the cake, correct? We will make the cake. So, in this case, we are making the cake. Obviously, we're not going to pay ourselves, correct? But if we ask somebody else to do it, say your housekeeper, okay, you ask her to, say she bakes really well, and you say, Auntie, please bake the cake for me. So, she'll be like, this is extra work, ma. Why should I do it? Then you'll be like, no, I'll pay you money. Don't worry. Just bake it. Today guests are coming home, so please bake the cake. So you need to pay her, right? So she's putting in efforts. So for that effort, you need to pay her. So say for baking one cake, you decide to pay her 200 rupees. Correct? Apart from this, there could be other expenses. Miscellaneous. Okay? So let's say another 100 rupees. What is this total? 750. So the total cost of baking one cake comes up to 750 for me. Okay, say this is a 2 kg cake. Okay, so for 1 unit of a 2 kg cake, I'm spending so much money. The expenses incurred were 750, correct? So can I say that the cost of baking one cake was 750, correct? So in this subject, that is what we are going to find out. We are going to find out the cost associated with various things. When we are manufacturing a product, what is the cost? Okay, if there are inputs being put into the process, what is the cost associated with that process or a given activity or a given service? Okay, so in this entire subject, this is what we're going to do. Find out the cost. Okay, why do we need to find out the cost? What are we going to do with it? To set the profit margin, because obviously now this cake you baked because you wanted to eat it. But suppose you were going to sell this in the market, then you need to understand at what price to sell, right? And only if you have the cost with you, you will know at what price to sell the cake. Correct? So we know that once I have my cost with me, to that I will add my profit and I will get my selling price. So in this subject, throughout, the only thing we are going to do is a certain cost. But is it so easy? No, right? Otherwise we wouldn't have a separate subject for it. Correct? It's not so easy. So this is a very simple example that I gave you. But there are too many things associated with this. There could be various departments. Correct? There could be, say, one cost which would be linked to all those departments. Now the question arises, which department will take what cost? Correct? There could be various activities in one department. Correct? Again, how to segregate that particular cost between all those activities. Correct? And then arrive at the total cost of the product. So there are many complications. This was a very simple example of one cake that we baked. Okay? But in an organization, there are so many things that you need to take care of. So now, when we are looking at cost, it's not that simple to calculate the cost. There are a lot of principles that we need to consider, a lot of techniques that we need to consider, and then apply it in understanding what cost is and how to calculate it. So in this subject, this is what we are going to study. Okay? And this subject is all about estimation. All about estimation. Okay? Because if I ask you now, what was the cost associated with this cake? What did you tell me? You said 750. Correct? Did we bake the cake yet? No, right? We estimated the cost. That assuming I'm baking one cake of 2 kgs, I will need flour, I will need eggs, I will need butter, I will need cream, I will need all these things, and all these things will cost me so much. So the cost of my 1 unit of cake will be 750 rupees. What did we do here? We estimated the cost. Correct? So costing is all about estimation. Because when we are ascertaining the cost, we don't have the actual. Actual is known only later. Is that okay, guys? So now, in this particular part, we have certain terms that we need to understand. Okay, so if you go to your chart book, the first page, please open your chart book, the first page. See here, so it says cost, expense incurred in producing a product or rendering a service. Correct? Can you all write the cake example here, please? Baking a cake. So what did we say? Flour, butter, eggs, cream, chocolate, caramel, sprinkles, labor, other expenses. You put random figures. 750. This is my cost. Can you all tell me what figures you put? Flour, 1%. Tell me what figures you put. 100 butter, 50, 50 cream, again 50, 100. Okay, same figures as mine. Other 100. 650. We'll make it 200. See, now I did that overwriting thing. Yes. Guys, okay? So this is our cost. Very, very simple. The expense that has been incurred in manufacturing a product or rendering a service. Correct? So this was my first word or terminology that I need to understand, because obviously the name of my subject is cost and management accounting. So obviously I need to understand the meaning of that cost. Okay. Now what is costing? The process of ascertaining costs. Now imagine here in my example, when we baked a cake, we were just one person baking one cake. Now you think of it as an organization, which is a baking organization, okay, a bakery which bakes cakes in and out. Correct? So imagine they are baking 200 units, 300 units in a day. Now if I ask the manager there, what was the value of flour that you used? Correct? He says 3 lakh rupees, ma'am. Okay. How did he get that 3 lakh rupees? Obviously, there'll be some supporting document, right? Correct? If you're buying your material or if you're paying all the bakers in that particular organization, there'll be some supporting documents because of which you will arrive at that 3 lakh rupees. Correct? Your purchase orders, what are those documents? Your bills, your purchase orders. Correct? In case of employees, how will you get to know how much you have paid them? Their salary slips or wage slips. Correct? So all these things are maintained so that you can arrive at your cost. Correct? Which is that 3 lakh rupees that he told. Correct? So the process of ascertaining costs, how have I arrived at that 3 lakh rupees, is called as costing. So this is cost. 750 rupees is cost. But the method that I followed in arriving at that 750 rupees is called as costing. So do you get the difference between the two? Cost, costing. The process of ascertaining costs. How did I know that the value of flour was 100 rupees? Obviously, I would have seen a bill. Only then I would have gotten to know. So like that, I would have had a separate bill for flour, separate bill for butter, correct? Separate bills for wages. So when I put everything together, only then I will arrive at 750 rupees. So the process of ascertaining that cost is called as costing. So nothing to write here. Correct? Let's move on to the next one. So cost over, costing over. Now which is the third one? Cost accounting. So this, we have studied this definition like a million times in accounts. Correct? What is accounting? Accounting is nothing but collection, classification, accumulation, assignment, correct, of various costs. Correct? So in cost accounting, we are doing the same thing. We are first collecting costs. Correct? All costs associated with material. Which is my material? Flour, eggs, butter, cream, etc. Correct? So first I'm collecting all my costs. So collection. Next, classification. Now guys, when you're in an organization and you're putting the costs together, will you do rough work there? Just put everything together and tell the CEO, yeah, the cost is this much? No, there is a way to present your information. Okay? And costs cannot be written just like that. Okay? You have to classify costs. That is where your cost sheet will come into the picture. That we will see later. What is the meaning of cost sheet? So there is a way to present your costs. You need to correctly classify them. costs could be of different categories. You could have fixed cost, you could have variable cost, correct? You all know what fixed cost and variable cost is, right? Basics. So we need to classify our costs properly. So collection, classification, accumulation. Okay, under one head, we could have many costs coming into place. So we need to accumulate all costs under that one head. Let's say we have a factory. Okay, we have not one, we have two factories. Okay, so one factory is in place A, another factory is in place B. Okay, for both factories I'm paying rent. So now rent is one cost, but it will accumulate costs from factory A also, from factory B also. Correct? So that is called as accumulation of costs. So there is collection, there is classification, there is accumulation. There could be assignment. So now let's take an example for assignment. What do you mean by assignment? Okay, now say there are 4 departments in my organization. Okay, now these 3 departments are in factory A. Okay, this department is in factory B. Okay, now for factory A, I am paying a rent of 10,000 rupees. For factory B, I am paying a rent of 8,000 rupees. So now if I ask you, what rent will go to which department? What will you tell me? From this example, it is clear 8,000 rupees is only for department D, because only D is in factory B. And for factory B, I am paying 8,000. Which means for D only I am paying 8,000. Correct? But A, B and C are all in this particular factory. Let's call it X. Let's not get confused. Factory X. Okay, let's call this Y, because A and B are already taken. So A, B and C are in factory X. Correct? For all 3 departments put together, I am paying 10,000. So can I say no, this 10,000 is only for A? Or only for B? Or only for C? Obviously no, right? Because all 3 departments are there in that particular factory, and for all 3 departments I'm paying 10,000. So now I have to figure out how to divide that 10,000 between all 3 departments. Correct? So we have to figure out a way. It could be anything, floor area, floor space, whatever. Correct? We are not going into that. So we have to figure out a way. That's it. This is called as assignment of costs. Correct? Which we will be doing later on. So collection, classification, accumulation, assignment, and control of costs. Control of costs, as the name suggests. I have a certain target. I have overshot my target. Correct? So now what do? Obviously, I have to control it. So I thought in this month my electricity bill is going to be 3,000 rupees. When the bill came, 5,000 rupees. Arey, why? Why has it become 5,000? I have to figure out a reason, right? From 3,000, so there could be 2 things. Either I didn't estimate properly. My 3,000 itself was wrong. Correct? Or something has gone wrong for it to become 5,000, 2,000 rupees more. So now I have to control that. Correct? So in an organization, cost control is very, very important. Correct? So all of this together constitutes cost accounting. So cost accounting is nothing but accounting of those costs. Why do I need to account? Because only if I account, I will know what my revenues are, I will know what my expenses are, and if I have my revenue and if I have my expense, I can arrive at my profit. Correct? And that is what is the main aim of cost accounting. Is that okay, guys? So Objective is income and expense. For what? For profit. Is that okay? So now cost accounting has various principles. It has various techniques. Okay, and these principles and techniques are going to be used in my process of determining the profit. And this is what we are going to study in this particular subject. Okay, so what are my objectives of cost accounting? What is cost accounting used for? 3 we already know. What? First is, start filling it, determination of cost. This we already know, already discussed. Next, determination of costs. Next, determination of selling price. This also we know. And if we have cost and selling price together, what else do we get? Third one is determination of profits. So 3 we know, 2 more to go. Fourth one, assisting management in decision making. Assisting management in decision making. What are we going to do with those costs? What are we going to do with the selling price? The management of the organization has to take various decisions from time to time. Correct? So all this data which is collected by cost accounting will be used by the management for the process of decision making. So cost accounting aids in decision making. It helps our management in taking various decisions from time to time. Okay? And the last one is cost control and cost reduction. Last one is cost control and cost reduction. So we will come back to this a little later. What is the meaning of cost control and what is the meaning of cost reduction? So these are the objectives of my cost accounting. We are doing all that accounting to first arrive at costs, to get our selling price, to get our profits, and to help management in taking various decisions. And along with that, cost accounting also helps us in cost control and cost reduction. But right now at this stage, we don't know what is the meaning of cost control. We don't know what is the meaning of cost reduction. That we will study in a bit. Okay, let's finish this. So cost done, costing done, cost accounting done. Now what are we going to study? Cost accountancy. So all of them don't have the same meaning. Correct? So what is the meaning of cost accountancy? Now, when you apply the principles and techniques of cost accounting for the purpose of taking various decisions, by whom? By the management, then that is called as cost accountancy. Okay, so if you see here, let's read this. Presentation of information for the purposes of decision making. So now I am applying that costing principle and technique for what? Not for mere calculation of selling price and profit, but I am applying those principles for taking very, very important decisions. Then that becomes cost accountancy. Okay, so guys, what are these decisions? What important decisions? So if you look down here, key decisions such as, please write down: make or buy, continue or shut down, which supplier to choose, which payment scheme to choose for employees, plant A versus plant B, product A versus product B, location A versus location B, and so on. So from time to time, the management has to take decisions like these. Should I continue? Should I shut down? Depending on the market situation. Should I make my raw material or should I buy my raw material? Okay. Should I choose this location or that location? Correct? A feasibility study has to be conducted. So various decisions have to be taken from time to time. So on what basis should I decide this or this? Some analysis has to go behind that, right? Now you have decided to come to this class. You would have analyzed, right? This class or that class. Should I write IPCC now or later? So some of you are direct entry students, right? So you would have decided maybe when you would have just started BCom. Should I do CPT now and continue with BCom, or after BCom should I join CA? It's a decision. Some analysis would have been behind it. So to take all these decisions, the organization needs some data to analyze. From where are they getting this data? Cost accounting gives this data to them. Okay, because I've already accounted for all my costs. Okay, using the cost accounting principles and techniques, everything is there. The data is there. Using that data, I will take this decision. So this part of decision making is your cost accountancy. Guys, is it okay? Everybody? So cost, costing. Cost is the figure. Costing is the process of arriving at that figure. Cost accounting is putting all my expenses and revenues in place so that I get my profits. Correct? Cost accountancy is using that data to take a decision. Guys, everybody clear? So, cost, costing, cost accounting, cost accountancy. So, if you see here, application of cost accounting principles. How cost accounting information is used for management requirements, which is nothing but to take a decision. And decisions I've already given you. What is an example of a decision? Guys, okay? Now, what is management accountancy? The name of this subject is cost and management accountancy. Correct? So, what is management accountancy? So, along with costing principles, when I also integrate principles of financial management, then it becomes management accountancy. Okay? So, integration of principles of cost accounting and financial management, because when I integrate the principles of financial management also, I am providing data to the stakeholders to preserve and protect their interests. Cost accounting consists of information which is internal to the organization, correct? But financial management consists of that information which will help in protecting the interests of our stakeholders. So when I merge both together, then we have management accounting. Is that okay, guys? So our subject is called as cost and management accountancy. Is it okay? So do you get the difference between the 5 terms used here? Cost, costing, cost accounting, cost accountancy, and management accountancy. So cost is the figure. I'm repeating once again. Costing is the process of determining that figure. Cost accounting is the accounting of expenses and incomes to arrive at profit. Cost accountancy is using principles of cost accounting for the purpose of decision making. Management accountancy is integration of costing and financial management so that we can protect the interests of our stakeholders. Is that okay? So now, where is all this used? Who uses what? So if you come down here, do you see this prism here? So let's call this top level management. Let's call this middle level management. Let's call this lower level management. So now the top level management will take care of all your decision making, correct? So your top level management takes care of all your decision making, which means naturally which part of whatever we studied deals with decision making? Accountancy. So cost accountancy, management accountancy, because both deal with decision making, will be dealt with the top level management. Okay, but all the groundwork, what is that groundwork? Costing, cost accounting, correct? Or accounting for that matter, all of that will be done by our middle level management and our lower level management, correct? Collecting all the data, putting it in the correct form of presentation, handing it over as reports to our top level management to take decisions. All of that is groundwork, correct? So once you become a CA, okay, and you decide to go into this field, where will you fit? Aha, top. Everybody wants to be in the top level management. So it depends. If you're doing the accounting part, then we'll be in the middle level management. Okay, not lower. But if you're going to be part of the management team, the CFO level, correct, taking important financial decisions of the organization, then you will be part of your top level management, taking care of the decision making process, which means you will be applying cost accountancy and you will be applying management accountancy. Guys, is this okay? Everybody? So this is how it fits in. Okay, so we had left one small part in the middle, which was the objectives of cost accounting. What was that? The last objective? Cost control and cost reduction. So our cost accounting helps us in cost control and cost reduction. What do you mean by cost control and cost reduction? Okay, guys. So we will now move on to that part that we had left out, cost control and cost reduction. Now these two terms may sound similar, but they're not. Okay, so let's try to understand what is the meaning of cost control, what is the meaning of cost reduction. So first we will understand the meaning of cost control. Okay, what is the meaning of cost control? Now say at home, okay, your dad tells you he's got you a new air conditioner, okay, for your room, and he tells you that the bill per month should not be more than 3,000 rupees. That's your budget. Okay, so this is more like our target cost. Okay, so you have to use your air conditioner in such a way that the cost does not exceed 3,000 rupees. Now the bill comes 1 month later. Okay, how much? 5,000 rupees. Gosh, what were you doing? Okay, 5,000 rupees. This is my actual cost. Problem? It was supposed to be 3,000, ended up being 5,000. So dad is very angry with you. What is this? I get you an AC and this is what you do. That's the only one thing I asked you to do. That also you can't do. Useless, blah, blah, blah. So he wants to investigate now. Okay, why has it increased by 2,000? Okay, so he does an investigation as to why the cost increased by 2,000. And then after his investigation, he finds out that there were some days when you were sneaking out of the house, okay, through the window, pretending that you are asleep so that nobody else finds out. Okay, you are going and partying with your friends. So the AC was on, okay, and there was a pillow in place of you on your bed. Okay, so after investigation, he finds out, okay, that the AC was unnecessarily switched on. He also finds out that when you were not in the room, even then the AC was switched on unnecessarily. Okay, because of which the cost increased by 2,000 rupees. So there's a lot of wasteful expenditure. Okay, so now he gives you the last warning. See, this is the first month. I'm giving you one last warning. From next month, if you do not control the cost, I'm going to remove this air conditioner and put it in your sister or brother's room. Lucky them. So this is cost control. Okay, so what is cost control? You first have a target cost. This should be my cost, whatever it is. It should not exceed this. Then you have your actual cost. Okay, now the actual cost is say more than your target cost. So you find out why. What is the reason for your actual cost being more than your target cost? So one reason could be you were at fault. You have wasted. Another reason could be your budget only is wrong. That target cost 3,000, that only could be wrong, no? Your dad has not fixed it properly. He could also go wrong. So if that is the case, you change your budget. If you were diligent enough in switching on the AC only when you had to use it, nothing was wasted, then the way your dad has budgeted 3,000 rupees, that only is wrong. So if that happens, then you change your budget. Your target cost is wrong. So for the next period, target cost has to be changed. But suppose target cost is not wrong, then it is your mistake. So now what do you need to do? Now you need to take precautions in order to not waste that particular expense. So that taking precaution so that you don't waste, that is called as cost control. And cost control can be achieved by supervision. Okay, it can be achieved by quality inspection. Okay, so every time in an organization, if we look at one department, target costs are fixed, then those target costs are compared with actual costs. Okay, if target costs are all right, but they are not matching with actual costs, then investigation is done. Then it is figured out why it is not matching. Once the reason is determined, precautions are taken. Okay, so everybody in that particular department is asked to control that wasteful expenditure. Okay, that is called as cost control. Okay, so cost control can be achieved when there is continuous supervision. So especially workers in a given factory, now they are using material for manufacturing a particular product, correct? So they are continuously supervised so that they don't end up wasting a lot of material. Okay, so cost control can be achieved by supervision. It can be achieved by continuous quality inspection. Okay, so this was my cost control. What is cost reduction? You can copy this example. It's very important, because when you have examples teamed with a particular concept, it will help you in retaining that concept. Through the example, you will remember the concept. Okay, so please make a note of all examples. All. Okay, I will give you time to copy it down. First, let's finish cost reduction. Then you copy it down. Okay, you copy down the example, then we'll fill whatever is necessary for cost control and cost reduction. Okay, let's move on to cost reduction. What is cost reduction? Cost reduction is nothing but the real and permanent decrease in cost per unit of a product without impairing the quality of the product. What? Real and permanent. So imagine in an organization where people are very serious about cost control. Okay, the minute your cost goes beyond target cost, immediately cost is controlled. So imagine if that continuously keeps on happening. So the long-term impact of cost control will ultimately lead to cost reduction, where permanently your cost will get reduced. Okay, so this is real and it is permanent. It is not temporary. Cost control could be temporary. Today, in this period, cost was more. I controlled it. There is no guarantee that in the next period also it will be this much. I have taken precaution, but maybe in the next period it may be a little less. So again I have to control it. Correct? But in cost reduction it will be permanent. And that is because of continuous practice. So I'm continuously practicing cost control over the period of time. So the long-term impact of cost control will lead to cost reduction. So my cost will permanently decrease. Okay, and it should decrease in such a way that the quality of the product must not suffer. It's not that I started using cheap quality material. No. The product of the quality should remain the same, or it should become better. It should never become lesser. Okay, so cost reduction is real and permanent. Okay, and it should not impair the quality of the product. So one reason because of which cost reduction could be achieved is when there is a long-term impact of cost control. So long-term impact of cost control leads to cost reduction. But if I don't want to wait that long, because I have to continuously keep practicing cost control, practice, and finally I am at a stage where my costs will reduce. Correct? That will take time. I am impatient. I don't want to wait for that long. Then what can I do? Then there are other ways of cost reduction. How? You can bring about changes in technology. You can bring about changes in methods of production. Okay, you could bring about you could re-engineer your processes. Okay, so we'll take an example. Say there's a tailor. Okay, there's a tailor. Now this tailor by hand is cutting material to make blouses. Okay, now he's cutting. That is one thing. Cost is something. Okay, instead of now the tailor doing it manually, say we replace it by a machine. Now the machine is doing, you feed in data, okay, to the machine that the blouse should be made of this dimension by this dimension. So the machine only will cut it. So there, don't you think there will be cost saving? Because now the machine is doing it. So what did I do? I changed my method of production. So first it was labor intensive where the tailor was manually sitting and cutting it. So he was taking 5 hours to do it. Say one blouse was taking him 5 hours. Now the machine is doing it. Now the machine is only taking 2 hours. So haven't we saved time? Correct? That will lead to cost reduction. So that is what I mean. You can bring in changes in technology. You can bring in changes in the methods of production. You can bring about changes in your processes. You can re-engineer your process. Okay, which will basically help in reducing costs. So if I don't want my cost control to basically impact my cost reduction, which is nothing but what? Cost reduction is the long-term impact of cost control. So if I don't want to wait for so long, then what can I do? I can do any of these. It will help in cost reduction. So basically the bottom line is, if this is my target cost and if this is my actual cost, bringing this actual cost to target cost is what? Cost control. Reducing the cost from target cost to something lesser is my cost reduction. Did you all get the difference? So when I'm controlling my actual cost to bring it down to target cost, that is my cost control. I'm controlling. Okay, how? Supervision, quality inspection. I have to investigate the reasons as to why it is more, take corrective action, keep practicing it. Correct? So it will reduce. It will become equal to target cost or a bit of deviation from target cost, which is acceptable deviation. Okay? But if I continuously keep practicing, ultimately there will come a point where my cost will become lesser than target cost. So that is the long-term impact of cost control. That is nothing but cost reduction. But for cost reduction, remember, it should be real and permanent decrease in cost per unit. It should not be a one-time thing. Okay, and it should be such that the quality of my product is not impaired or hampered in any way. Okay, but if I don't want to wait for so long, then what can I do? I can bring about changes in the methods of production. I can bring about changes in my technology. Correct? I can re-engineer my processes so that my cost is reduced further from the target cost. Did you all understand the difference between cost control and cost reduction? So cost accounting principles and techniques help us in achieving cost control and cost reduction. Is it okay? Will you all copy this down? So this is for cost control. Guys, in the chart book, whatever is given, don't fill that. This is just for your understanding. Chart book, I will make you fill specifically. You can make a note of this somewhere in your chart book on the side or in another book, like I said in the beginning of the class. Okay guys, so let's head to our chart book now. We'll fill up the missing figures there. I'm flipping. Okay. So do you see this example here? Guys, you can give any example. Target cost. So this is our cost control basically, correct? So target cost, let's call it 10,000 rupees. Correct? My actual cost is how much? Let's say 12,000 rupees. So how much is my variance or difference? 2,000 rupees. So my actual cost was 2,000 rupees more than my target cost. So what should I do now? First, investigate reasons as to why it is more. Reasons can be of two types. What are they? First, probably my target cost only is estimated wrong. So if that is the case, set right your target cost. But if the target cost is correct, then what happens? That means you are at fault somewhere. There is some wastage somewhere. So figure out what that wastage is and take action, okay, for the future to control that cost. So that is your cost control. Once you're controlling cost, there is no guarantee that tomorrow it will be controlled. For all you know, you'll have to control it again. That complete control will come over time. Correct? But when it comes to cost reduction, in case of cost reduction, there is real and permanent reduction in cost per unit without impairing the quality of the product. So we'll write an example for this, how it happens. So let's take, say, the first part, the process where I have wages paid to tailors. Okay. How many tailors? Say 10 tailors. Okay, they are working for me, cutting cloth. Okay, this is my first process. So 10 tailors are totally manufacturing 100 t-shirts. Okay, and they are paid 1,000 rupees. So what is my cost per t-shirt? 1,000 rupees by 100. So I get 10 rupees. Correct? Now I am going to replace my tailors by one machine. So these 10 tailors are going to get replaced by one single machine. So my next process is machine. Correct? Replaces tailors. Correct? Now this machine will also manufacture 100 t-shirts, but the cost associated with this machine for manufacturing 100 t-shirts is only 500 rupees. Because tailors were taking more time. They were manually doing it. Machine, quick. You put an algorithm inside the machine, a command, it cuts and gives you 100 pieces just like this. Correct? So the cost is less. So if I ask you to calculate cost per t-shirt, guys, how much will it be now? 500 divided by 100. So rupees 5 per t-shirt. So what is this? Real and permanent reduction in cost per unit of the product. So cost reduction, I told you, happens in two ways. One was long-term impact of cost control. Correct? The other one was change in methodology or technology or re-engineering process. Which example is this for? Obviously the re-engineering, where I have re-engineered my process. I have replaced my tailors by a machine. So change in the method of production. That is how I have achieved cost reduction. Guys, is it okay? Everybody? Have you all written this example? No? Okay, please write quickly. And connect the 10 to 5 to real and permanent reduction in cost per unit. From 10 rupees, I have reduced it to 5 rupees. Please connect that to real and permanent reduction in cost per unit of the product. So, one small point I want you to add here. Please say. Brought about by supervision and quality inspection. Cost control. How do you achieve cost control? Through these two. Please write that. Hope your books are not smudging. No, right? Brought about by supervision and quality inspection. And here you will say brought about by long-term impact of cost control or change in method of production, change in technology, re-engineering processes. Guys, okay? Correct, no? Everyone? So we are done with what all? Definition of cost, meaning of costing, cost accounting, cost accountancy, management accountancy. Correct? And we also saw the objectives of cost accounting, and in that one objective was cost control and cost reduction. We figured out what is the meaning of cost control and cost reduction. We also saw which levels of management deal with which area. Correct? So now we need to see what is the scope of costing. So our subject, which is costing, cost accounting, we need to see what is the scope of this subject. What is it that we are going to analyze in this subject? So now if we are selling goods or services, these are the only two things that we can give. One is we can sell goods or we can provide services. So when we think of selling, these two things come to our mind. So what are they? Goods and services. Correct? Now if we are looking at goods alone, okay, so what does this say? See this? Purchases finished goods, sells finished goods. Who's this person who purchases finished goods and sells finished goods? Who is he? A retailer. Correct? A retailer or a trader. A trader merely purchases finished goods, sells finished goods. Correct? So there is another person in the story. Who's that? Purchases raw materials, correct, and sells finished goods. Who's this? Manufacturer. So the other person is the manufacturer or producer. Correct? So when we talk about goods, who are the two people we're talking about? One is retailer who purchases finished goods, sells finished goods. One is the manufacturer who purchases raw materials, converts those raw materials to finished goods and then sells them. So more work for the manufacturer. Correct? So when we're talking about goods, we're talking about these two people. Now in costing, retailer scope is minimal. Okay, so what will we say? Minimum scope in cost accounting. Okay, we are not going to analyze the behavior of a retailer or trader that much. Okay, which means whom are we going to analyze? Manufacturer. So maximum scope of this subject is for the manufacturer. Okay, so the maximum emphasis will be on the manufacturer or producer. Okay, so let's say maximum scope in cost accounting. Hope you're filling it. So goods, services, retailer slash trader, manufacturer slash producer. Retailer, not that much scope in cost accounting, but manufacturer, maximum scope in cost accounting. So whatever problems we are going to solve, whatever chapters we are going to study, we are going to have the manufacturer in mind. So everything will be from the producer's point of view. So this is in relation to goods. Okay. Now we have services. Services are intangible firstly. Correct? Now this area is still under development. which means we will be studying services in cost accounting, but we are still developing lots of ways to cost services. Because services are intangible, the process of costing services becomes a little complicated. Certain services are very complicated to understand. What is easy? No problem. But certain services, very complicated to understand. So we are still figuring out ways to cost certain services. So this area is still under development. Nevertheless, we will be studying what is possible, okay, and that will come. So if you remember, in the beginning of the class I showed you one chart showing the overview of cost accounting, all 14 chapters. So this chapter will come in leg 2 by the name service costing. Okay, so we will be studying about services also. So you will say intangible, still under development, and you will say service costing. This is also known as operating costing. Service costing, also known as, ACCA stands for also known as. Service costing is also known as operating costing. So if I ask you, maximum scope is for whom? Manufacturer. Then we will talk about services, the service provider. And then it will be retailer or trader. So most of your problems will feature our hero, which is the manufacturer or producer. Guys, okay? Shall we move on? Okay. So now you may have a question. We are going to account for revenues, we are going to account for expenses, we are going to determine profit, but that we do in accounting also, no? Same thing you have in your financial accounting also. You account for revenue, you account for expenses, you have your P&L account, correct? You have your balance sheet. That is also throwing up the profit for you. Then why do we need a separate subject called cost accounting? What is so different about cost accounting that we need to study a separate subject for 100 marks and break our head? So there are some differences between financial accounting and cost accounting. Okay, there are certain things that only cost accounting addresses. Financial accounting does not address those things. So before I make it very boring for you by telling you, okay, these are the differences between cost accounting, financial accounting, which anyway you can read from the theory book, we will directly take an example. Okay, so if you go to your chart book, the next page, we will understand this example and then understand what is the difference between financial accounting and cost accounting. Now see here. Let's say the material cost, this is as per financial accounting. Okay, in financial accounting, this is what you would do. Material 1,50,000, wages 70,000, other expenses 50,000. What is your total expense? 2,70,000. Then you will compare this expense to your sales or revenue. So say total sales was 3 lakh. You will put this in your P&L account. By sales, 2 expenses, 2 gross profit. How much? 30,000. How did you get 30,000? 3 lakh minus 2,70,000. Correct? This is what you will do. Then I'll ask you guys, what is the profit percentage? How will you calculate profit percentage? You gross profit divided by sales into 100. So let's write that. So profit divided by sales into 100. This is what you will tell me. So if we calculate 30,000 is my profit, sales is 3 lakh rupees into 100. How much do I get? 10%. So I am making a 10% profit margin. This is what I get to know. This is what financial accounting will tell you. Great. Cost accounting will go deeper. So if we were to see this entire example from the eyes of cost accounting, this is how cost accounting will talk. So now material was 150, correct? 150. Total material, total labor was how much? 70,000. Total expenses were 50,000. So now cost accounting will divide these expenses between the various products manufactured. So you say you have product A, you have product B, you have product C. So material component is 48,000, 37,000, 65,000, totaling up to 1,50,000. Labor will be 15,000, 25,000, 30,000, totaling up to 70,000. And other expenses will be 15,000, 18,000, 17,000, totaling up to 50,000. So my total costs will still be 2,70,000 as was in the case of financial accounting. That is not changing. But the individual components for each products will total 2,70,000 as 78,000, 80,000, 1,12,000. Correct? Same way sales was 3 lakh. There also, here also. But again, because I have split my costs in the ratio of the products, correct? My sales will also be in the same ratio. So 1,02,400, 1,08,000, 89,600. I've split my sales between my 3 products. Now if I ask you to calculate profit, how will you calculate? How will you calculate? Sales minus costs. Can you please calculate the first one and tell me? 1,02,400 minus 78,000. How much do you get? 24,400. Second one? 1,08,000 minus 80,000. How much? 28,000. Then third one? Minus 22,400. Total profit will still be 30,000. This 30,000 was given to me by financial accounting, correct? But here something looks very fishy, correct? Product A is giving me a profit of 24,400, correct? Product B is giving me a profit of 28,000, but product C is loss making. This financial accounting didn't tell me. I just had the total profit. Looking at the total profit, I was like, happa, I'm doing my work well. I'm making a profit of 30,000, 10% margin, correct? But if you analyze it further, deeper, then this is what you see. So if I calculate the profit percentage here, how will you calculate the profit percentage here? Can you please tell me? 24,400 divided by 1,02,400 into 100. How much? 23.83%. Here 28,000 by 1,08,000 into 100. How much? 93. This will be nil. No profit percentage. Overall will be 10%. Guys, see this. Actually, my organization is making a profit margin of almost average 24%. Average. But overall is decreased to 10%. Why? Because of this particular product. Loss-making product. Yes or no? So did this information come to us through financial accounting? No. This came to us through cost accounting. So cost accounting goes deeper into each element of cost. Now cost accounting will tell you why is there a loss. Now that there is a loss, first we'll have to figure out why is there a loss. Can that loss be minimized next time? Can it be converted to profit next time? If it can't, then what should we do? All that analysis comes as part of cost accounting. Financial accounting will simply give you the superficial figure, which is 30,000 overall. That's it. End of story. Yes or no? So now, this data that we have got, now we need to conclude on it. So how do we conclude? Please write down. First one. Product C is pulling down the total profitability of the organization from products A and B. So point 1 under conclusion. The management needs to analyze this situation and take a decision. So actually my profit could have been more, but product C has pulled it down. So now I need to take some decision regarding this. Why should I produce a loss-making product? So the management needs to understand this situation and take a decision. So what decision could the management take? Decision options. So what are my decision options? Investigate reasons as to why product C is loss making, and reduce costs by taking corrective action. So investigate reasons as to why product C is loss making, okay, and reduce your costs. Only then you can arrive at a profit. Correct? Reduce your costs after taking corrective action based on whatever you have analyzed. So this is my first decision option. Second decision option could be, suppose costs can't be reduced. Okay? Costs cannot be reduced. That cost was correct. There was nothing wrong with the cost. I did not waste anything. Then what else could I do? Okay, I can think of increasing the selling price. Maybe I've not fixed my selling price properly. Correct? So you could increase the selling price if product C's demand is inelastic. Inelastic demand means whatever the price be, the quantity demanded does not fluctuate much. The responsiveness is weak. So even if I were to increase the price, whoever is buying my product continues to buy it. It's not that they are going to suddenly stop buying the product. So if the demand is inelastic, then you can still think of increasing your selling price. Okay guys, third one. Now I cannot decrease the cost also. I cannot increase my selling price also. What can I do? Don't purchase, don't produce C only. Correct? I cannot do anything. See, whatever examples you're giving, like change in technology or purchase, that all comes here. I'm trying to figure out a way to decrease my costs. Correct? So see, that is not possible. Selling it at a higher price also is not possible. Demand is not inelastic. Then what do? Better than making a loss is to stop. Correct? So the third option could be stop production of product C. Stop production of product C. Yes. So you could stop production of C. So these are my various decision options. So now cost accounting will help us in analyzing these decisions, okay, which financial accounting did not. Okay, so that's why we have a separate subject called as cost accounting, which helps us in analyzing costs in depth. We go into each and every cost, into its breakup, and then understand why it is so, how it is so, what can be done, okay, which financial accounting does not help in. Okay, so we say that financial accounting is a mere post-mortem. Okay, costs are incurred throughout the year. At the end of the year, you will pick all those costs, put it in your P&L account, show your balance sheet. Do you ever analyze those costs? No. To analyze those costs, cost accounting comes into the picture. So the first thing is cost accounting, because cost accounting happens throughout the year. Then comes financial accounting, which picks costs, puts them in your P&L account, balance sheet, gives you the actual position of your business. So we say financial accounting is a mere post-mortem. It just happens in the end. Okay, cost accounting goes deeper into each element of cost. Okay, so in costing, throughout the year, you are analyzing. Correct? Throughout the year, you are analyzing. So if this is 1st April and this is 31st March, okay, say this is 2018, this is 2019, correct? Financial accounting begins here. Correct? But cost accounting is happening throughout the period. Okay, I also told you cost accounting is all about estimation. Correct? We'll take an example. Let's say there is a furniture manufacturer. Okay, manufacturing furniture as per the customer's requirement. Okay, so this guy has his own production shop where you can come place your order. He will deliver the order as per your requirements. Now you are his customer. You have come to him. Say you're starting a school, so you tell him, I want 100 benches and 100 chairs. Okay, now he says, sure, I can deliver this to you, but I need 15 days. So you tell him, okay, no problem. These are my specifications. This is how I want my bench to be. This is how I want my chair to be. Okay, so you give him all the specifications. Then you say, please give me a quote. You tell him how much will you charge for it. Now, has he started your bench and chair? No. He's going to do it in the next 15 days. Correct? But for you to decide whether to go ahead with this furniture manufacturer, you need a quote. Correct? He has to estimate the costs. That, okay, for manufacturing 100 benches, for manufacturing 100 chairs, I would need so much wood, I would need so much nails, I would put in so much labor, so many expenses will go into it. And then after making a quote, he will tell you that for all this put together, I will charge you 2 lakh rupees. Have these expenses actually been incurred? No, they are not actually been incurred. They will be incurred in the next 15 days. Correct? But what have you done? What has he done rather? Estimated. So costing is all about estimation. Okay? So the organization would be expected to give quotations. Correct? Would be expected to estimate various costs. But those costs wouldn't be incurred. So you are only basically estimating. Then in the end, when you actually get to know what your actual costs are, then you do a comparison and then you correct it if you've gone wrong in your estimation. Guys, is that okay? So based on this estimation, this quote that he has given, he would have included his cost, estimated, he would have put his profit in place and then given you the final quote or selling price, whatever. And then based on this quote, you will decide whether to go ahead with him or not. So costing is all about estimation. So in all the problems going forward, you will be dealing with estimated figures, not with actual figures. For actual figures, you already have financial accounting, because financial accounting starts later, after the actuals are in place, to show you your actual position in business. Is that okay? So now you may have a question. Ma'am, if we are estimating everything and if that estimation does not match with actual, then what do I do? Don't worry, it gets corrected later. That mechanism is also in place, which we will be studying later on. Okay, now how it gets corrected, that we cannot understand at this stage because we don't know anything about costing. Okay, but everything is estimated. Guys, is it okay? Everybody? So, do you all want to copy this? If you want to copy it, please copy it. So we'll move on to the next part. Now, whatever we're going to do is very, very important from the conceptual point of view, because we're going to be applying all of this in the problems that we are going to be solving later on. Okay, so the next part of this chapter is cost classification. Okay, very important. We need to understand how costs are classified. Okay, because when we study our cost sheet, it's going to help us there. So initially, certain costs we don't really need to link to a cost sheet, but as we are studying this cost classification, I will slowly link each of this to the cost sheet also. Okay, so as we are understanding cost classification, side by side we will also start understanding our cost sheet. Okay, it will happen parallelly. Okay, so cost classification. Costs can be classified on the basis of certain criteria. Okay, what is that? First one, what does this look like? Time. So on the basis of time, first one. Next, on the basis of behavior. What does this look like? Fire, earth, water, elements. So on the basis of elements. This control. So on the basis of controllability. Okay, this is a bit hard to guess. Difference. So 3 of them are sitting normally, one is weird, extraordinary. So on the basis of, yes, normality. So these 3 are normal, this is abnormal. So on the basis of normality. Next, on the basis of functionality. And the last one is others, etc. So we will finish on the basis of time and then wind up this class, and then in the evening we're meeting again, then we'll continue. Okay, so first one, on the basis of time. So on the basis of time, I have 3 types of costs. You have historical cost, first one. Second one, current cost. And third one, predetermined cost. So guys, as the name suggests, historical cost is the past. Correct? Current cost is the present, and predetermined cost is the future. So on the basis of time, correct? So what is historical cost? Cost which is ascertained after a particular event is over. So you have purchased a new machinery or a new asset. So the cost of that asset which is calculated is called as historical cost. You would have studied this in accounts. Why? Because I've already purchased. Once I purchase the machinery, then I'll get my cost of machinery. How? The purchase value, the installation, the erection, everything put together becomes my value that I'm going to capitalize. Yes or no? So that is called as historical cost. After the event is over, when I am calculating costs, they are known as historical costs in the past. So what will you write here? They relate to happenings which have already taken place. So costs ascertained after being incurred. After being incurred. Guys, examples of such costs. There's a small mistake here. This should come here and this should come here. So I would want you to give that arrow. So see here, cost of an asset. You get to know the actual cost of the asset only after you have purchased it. Correct? So historical cost. Actual cost of production. While production is happening, you will not know what the cost is. Only after the production is over. So production event over. After that, I'm getting to know what the actual cost of production was. So historical cost. Okay? So when I get to know the cost of something after that particular event is done with, after it is over, then that is known as historical cost. Guys, okay? Simple. Next, current cost. What is current cost? As the name suggests, costs associated with the current period. So please write costs associated with the current period. So the example is cost of production for the current month, right now. Whatever I have produced right now, I want the cost. It's the actual cost, but for the current period. So current cost. Guys, okay? What is predetermined cost? Future. My month hasn't even started, but I have already figured out what the cost will be. Estimated cost, predetermined cost. So what will you say? Costs which are computed or determined in advance. So before my month has started, I have already figured out what my cost will be. Correct? So things like budgets, standard costs, quotations. Correct? The furniture manufacturer in our example here, for 100 benches, 100 chairs, said that he is going to quote 2 lakh rupees. Has the production of those benches and chairs started? No. But without him starting production, he said 2 lakh rupees I'm going to charge. Correct? So he has already estimated what his cost could be, added profit to it, and then given you a quote. That's a quotation. So that is a predetermined cost. Before the event has happened, I have determined my cost. What is the event in this case? Production. Yes or no? So that is my predetermined cost. So on the basis of time, historical cost, current cost, predetermined cost. Guys, is it clear? Everybody? So I think it is time up. Today is the first class. So I'm being nice to you all. Okay, so that you like me. So I'm going to leave you a little early, so that you don't talk ill about me in the first class only. But from tomorrow, or rather today evening, we're going to start class dot on time, but we may not finish class dot on time. Okay, so a couple of minutes delay here and there will happen. So please be used to it. Okay, so see you all in the evening. Have a great day, guys. Bye.